Hey everybody, Mike Desepoli, Heritage Financial Advisor Group. I hope this video finds you doing great. We're back with another portfolio and strategy update. There's really a lot for us to unpack from the first quarter. A couple of highlights I'd like to give you here today. And we also want to talk about what's on our radar for the second quarter. So the first quarter was really a tale of two stories. In January, we saw the market start the year and take off like a rocket ship. And then we got into February and March, and we saw something return to the marketplace that we haven't seen in about 14 months, and that is volatility. And the volatility presents itself in the market in the form of these wild swings that we see both up and down. So I want to talk about what I think and what we think are a couple of the drivers of that volatility that we saw in the first quarter. The first one is interest rates. You've been hearing us talk about interest rates for several years now. The Federal Reserve is on a path to raising interest rates, and that's not the big concern. The big concern is that they do it too quickly. Okay, and the reason that's a concern is because markets and financial instruments get a lot of stimulation from low interest rates. And as they raise interest rates, it's kind of seen as taking the punch bowl away. And if they do it too quickly, it could cause some chaos in the financial markets. So that's something that bears watching as we move ahead with the new chairman of the Federal Reserve, Jerome Powell. Second thing the markets were responding to in the first quarter was this consistent narrative around the fears of a trade war between the United States and China. Now, if you've seen some of our previous videos, we're of the belief that a trade war will not happen. I just think there's too much at stake for both sides, but particularly for China. The imbalance of trade between our two countries is staggering, somewhere around $500 or $600 billion a year. So if anybody thinks that China can get by without trading with the United States, it just simply cannot happen. But nonetheless, the narrative being pushed by the media is a lot of these trade war fears. All told, we think this is something that will end peacefully. I think this is just some posturing right now by both countries looking for an edge in negotiations. So that's something that bears watching. But every day as we get, new pieces of news and headlines regarding that, we're seeing the markets react. And of course, the third thing I wanted to touch on was the sell-off that we saw in the technology companies, some of the bigger tech names in the first quarter. Facebook ran themselves into some trouble with that data scandal, which put a lot of pressure on both their stock and the rest of the technology sector. And then we've seen Amazon draw the ire of the president through some of these early morning tweets, questioning the deal they have with the Postal Service and if that's something that's costing taxpayers money. So obviously, anytime you see that type of negative attention on companies, it puts pressure on them. And because these companies are so large, it puts pressure on the rest of the technology sector. So that was really some of the drivers of the volatility that we saw in the first quarter. And as far as what we're putting on our radar as we move into the second quarter, well, we do think there's going to be more volatility in the markets. The one thing about volatility, it's like grapes, and it's because they come in clusters, right? So you generally don't just see one day of volatility mixed into, what would be more normalized flat markets. You generally see volatility spike for periods of time, whether it's a couple days, a couple weeks, or in the case that we're in right now, a couple months. Volatility does not have to be bad. We know it can be scary, the gyrations that you see in the market, but volatility does not necessarily mean to the downside. It could also be volatility to the upside. So we're going to continue to monitor that situation there. We're hoping for a trade resolution between the U.S. and China. President Xi spoke last night, and he hinted at possibly some concessions as far as lowering taxes on the U.S. automakers trying to do business in China. So even the slight hint at a concession has the markets up today, obviously reacting to that news. But again, we're going moment by moment here, tweet by tweet, if you will. So we just really need to see how things will play out over the coming weeks and months ahead. But hopefully we'll reach a resolution sooner than later, because the uncertainty and the fear is definitely weighing on the markets. The first quarter saw the markets finish slightly negative for the quarter, but technology still outperformed the broader market. We continue to like technology as we move into the second quarter. Aside from some of the pressure that I just mentioned being put on Facebook, Amazon, and companies like that are under regulatory scrutiny, we still think there's a lot of opportunity in the technology sector in Q2. Obviously, earnings season is about to kick off, and this will be the first earnings season where companies will report results that include the first quarter, which is after the tax cut was passed. So obviously, that's something people are waiting to see. Will this tax package, will these tax cuts, both on the individual and the corporate side, will it have the effect that many economists were projecting? Will it help these companies grow their profits and grow their bottom and top line, which would be good for markets? So that kicks off on April 13th. We'll be watching that very closely. And if you have any questions about anything we're discussing, both here in this video or anything going on in the economy, please reach out to me. We'd love to talk with you. I hope I see every one of you soon. If you have any questions, you can shoot me an email or give us a call. Thanks so much for tuning in. Have a great day.